Cyril Ramaphosa's government does not have much fiscal room to play with. In fact, it's got no fiscal room to play with. Does that put more pressure on you on the monetary side to deliver more to help growth in South Africa?
Well, we have a constitutional mandate of price stability, and the authors of our constitution understood that price stability is a necessary condition for balanced and sustainable growth, but it is by no way a sufficient condition for balanced and sustainable growth. We do believe from where we are standing that we do not have a lot of monetary policy room either, but monetary policy is still accommodative. And yes, you are right when you say that there is no fiscal room, but that is for the Minister of Finance to communicate to his colleagues.
I'm wondering what it would take for you to cut again this year. The market is not expecting a cut. Is it down to the Federal Reserve over in Washington as to what you do next this year? If we were to see the Fed being more aggressive, let's say a 50 basis point cut coming from the FOMC, would that encourage you to do more? How important is the dollar and how important is the Fed in your thinking right now?
The focus of monetary policy is to get inflation under control. We do not target interest rates, we target inflation. We are a small open economy, which then means that developments in the global economy play a very important role. And at the moment, there are two important factors that would impact our environment. The first one has to do with the trade tensions, which impact on global growth. And you know that what drives the global economy is actually global trade. But the costs thereof are not just from the direct effects of growth, but are also coming indirectly through confidence on investors, that if you are to deploy money in a new investment and you want to produce additional goods, you've got to be asking yourself, would these trade tensions continue to be playing in, and where would they emerge? That's the first aspect. The second aspect, of course, is what you have mentioned, which has to do with the monetary policy settings in the developed world. We watch those very closely, and the manner in which they affect us had been that our own settings were expecting that there would be monetary policy normalization as we were getting into this year. And we were expecting that with monetary policy normalization, you would then see a repricing of financial assets in the emerging markets, and you could see actually outflows from the emerging markets. The global economy had since slowed down.
Yes.
And the monetary policy settings in the advanced economies now are moving towards more accommodation. And that then began to mean that emerging markets then also begin to benefit from that as investors are looking for yield.
Well, Governor Kganyago, what do you see as the biggest risk to inflation right now? It's been at or below your preferred 4.5% all year.
Well, at the moment, inflation is well behaved, is well contained within our target range, is closer to the midpoint of our target range, and but that is today's inflation. What matters is what happens to inflation going forward. And at the time of our previous monetary policy committee meeting, we identified the risks as being the exchange rate, being oil prices, and so forth. Both variables seems to have behaved and had actually provided the space for the risks to be mitigated somewhat. But in 14 days' time, we will be making a reassessment as the Monetary Policy Committee. And based on the data that comes out and the forecast that will come from that MPC, we will make a decision that we believe is appropriate and consistent with our reading of the data.
Speaking of the data, we got 3.1% GDP growth data yesterday, which means the economy averted a recession. What's your outlook now for growth for the full year?
Well, at the time of the previous MPC, we had a penciled growth of 0.6% for the year. For now, we are still holding on to that. What the figure of yesterday actually means is that even if we get zero growth for the next 2 quarters, the South African economy will still grow by 0.3% this year. To get growth of, say, a 1%, the remaining 2 quarters of the year would have to grow by between 3.6 and 4.5. That is not quite a scenario that we are looking at the moment, and we are still comfortable with the 0.6% growth that we have for the year. And must say that the figures that came out yesterday, but they seem to be broad-based, with the exception of the a few sectors. And we will continue to watch the data, but I think that 1 quarter is just too close to make fundamental changes in your views based on the 1 quarter. And this is also a quarter that comes out of a very low base in the first quarter. So much as there is strong performance by mining, by the banking sector, by the retail sector, and so forth, we have got to take cognizance of the fact that the low base in the first quarter has continued to play a role in the growth outcome that we had.